Gaurang, thank you very much for accepting our invitation. I think many people are surprised at how come Gaurang Damani, who's otherwise known as a civic activist, is doing an insurance seminar. So I think it needs a slightly different introduction. Lots of people who actually deep dive into insurance are people who seem to come from an engineering background. So Gaurang is also an engineer, and he's of course a social and legal activist. He's worked in the US for several years, and then he came back to India wanting to do something for the country. And one of the things that he did after coming back is to set up a website called Die Hard Indian. And if you haven't seen it, I would suggest please go and log on to it sometime. It is www.diehardindian.com. And the reason you should do this is that anything that you need, whether it's a birth certificate, a death certificate, a passport, your municipal rules, or your housing related rules, he's got everything possible listed there and how to go about doing it, including stuff on RTI and whatever. So he landed up in two important public interest litigations. One was on how your cars are towed illegally all the time, and he won it to the Bombay High Court. He argued it himself. And the other litigation that he filed is on health insurance. And all of us know that health insurance has been an area where every one of us has just been looted by insurance companies for several years. The regulator had no interest in changing the rules. And it is Gaurang's PIL that was filed. He argues it himself. He's been at it alone year after year, which has led to significant changes in insurance policy. So a lot of times I keep saying that people assume things are changing because they realize people are upset or they're cheated. Nothing like that happens in India. It's usually one person who is doggedly following something systematically that is making enormous change happen. And I think we need to give him an enormously big hand just for this. Fighting a PIL on insurance is not an easy job. As you know, insurance itself is a very, very tough subject. But to stand there with a battery of lawyers representing insurance companies, top lawyers representing IRDA and the Insurance Council, and for him to stand alone, and there are not very many people who even go there to stand with him every Thursday when the case comes up, stand alone and fight his own case against them, requires phenomenal amount of knowledge. And this is just one of the things that he does. Apart from this, he's very active socially. He is part of Sunday Indians, which does a lot of work with LTMG Hospital. For 10 years they've been doing that. It helps people to get medicines and relief at a lower price. He's into things like skin donation, eye donation, and especially the medical supplies have been a big benefit to a lot of people, including some of our own colleagues. So with this small introduction, I'm handing it over to Gaurang.
Thank you, ma'am, for the very kind introduction. Thanks, Moneylife, for inviting me here and letting me share my thoughts. I'll start, and it is basically just giving information about what the new regulations are, and you can interrupt me at any time. We can make it more like a discussion. I've split the presentation into two parts, the policy document part, and the second part is the claims part. So if you have anything related to claims, if you can please hold on till the second part, and policy related, anything you see which comes up, we can discuss it. As I said, the first part is about policy. So we'll start with the policy part on what the regulations include. And I would also like to publicly thank the Bombay High Court for being so helpful in this matter. The PIL has been going on for 4 years. It's still continuing because of some pending issues which IRD has not sorted. So I would like to publicly acknowledge Bombay High Court for taking a great sympathetic view of the consumer. As I said, the policy issuing part, a lot of times, when we make a claim, immediately after that, the premiums increase. So this was specifically argued in the PIL and with a lot of evidences. So IRDA was kind enough to make a clause which says premiums cannot be increased in a very arbitrary way. So especially for senior citizens. And that clause, these are the clauses. So what I'll do is, I'll also read the exact text if it's okay with you guys. So you get the idea. I'll read 7H1. Surprisingly, the regulations are very easy to understand. Generally, the legalese makes us little wary of these regulations or acts. But this particular piece of regulation, the IRDA has done a very decent job. It's in a very plain English type language. 7H, loadings on renewals. The loadings on renewals shall be in terms of increase or decrease in premiums offered for the entire portfolio and shall not be based on any individual policy claim experience. So if you have made a claim, your premiums cannot increase just like that. It has to be for the entire portfolio for that particular plan. It is specifically mentioned. The second part of this clause, the discounts and loadings offered shall not be at the discretion of the insurer. It shall be based on the objective criteria and shall be disclosed upfront in the prospectus and policy document along with the objective criteria and shall be approved under file and use. 7C and 4B basically is also mentioning the same thing but in different words. It says that the insurance company has to submit the plan to IRDA for approval. And if it is a multi-year policy, let's say they are pledging that the premiums won't change for 3 years, then they cannot change it randomly. So the policy premiums are very strictly defined in the new regulations. So anytime you feel your premiums have increased, you can definitely fight. And the last section of this presentation will tell you how you can approach different agencies for your grievances. Earlier, as some of you might know, senior citizens would suddenly find that their policy is lapsed, it's not renewed, you are being harassed. And entry age also was restrictive, saying you are too old, you can't get a policy. So that has all changed. There's been a lot of complaints from senior citizens saying that, our grievances are not heard. It's not, the good news is that grievances are not heard for everybody. And the better news is that they have, in the regulations, they have provided for a separate cell to be created by IRDA. The insurance company should have a separate mechanism to deal with senior citizens' complaints. So, as I said, the second part of the PIL is still going on, and that part is the compliance of these regulations. The regulations are really nice, but in the last affidavit, in about 15 days back, last hearing, IRDA itself admitted that the insurance companies are not complying with the regulations. So that is the second part of the PIL right now. Each insurance company should have a grievance officer. So you have to write by regular mail or by email to the grievance officer, and if there is no reply, which generally is the case, then you can write to IRDA. IRDA has a postal address, it has a toll-free number and an email ID. So you can write or call those numbers. If there is no reply, then you can file with the ombudsman, and the ombudsman in Mumbai is in Santa Cruz in the LIC building. Just 2 trips are required, believe it or not. 1 trip is to submit your papers, and second is they'll call you for the hearing. So this is the sequence for any grievance related to claims or policy.
Most of the time, when you are due for renewal of the policy, they send you the notice. In fact, you have to pursue them to get that, that letter which says that your policy is expiring and you need to renew. When you look at the portability, that is 45 days.
45 days prior to maturity.
You never receive any documentation. Yeah, you never receive any documentation telling you that your policy is due, you have these options. Nothing comes within that 45-day time frame. It always comes at the last minute.
So there is nothing like that in the regulation. Honestly, my personal opinion is that we should be attentive, and our agent should take care of it to remind us, because we have 100 things going on and we are paying a commission to the agent. So it's the agent's duty to remind you 15-20 days ahead of time. There's nothing like that in the regulation. So that is why this specifically was argued in the court, and I said the same thing, that 50-page document, it's very difficult to read, and all the important clauses may or may not be there. So section 8D, they have compulsorily said, it's coming up in the slide, that there should be a 1-page key information sheet which should have all the details of the policy. So incidentally, the very last hearing, the same thing was discussed, and I sent them a template also on email to all the respondents, all the insurance companies, that this could be a template where all the important points of the policy should be included. So all these points which are there in the presentation, which are relevant, I've said it should be in a 1-page sheet, which is anyway mandated by the regulation.
Further to what he said, that's a fact I keep following up. Instead of the agent reminding me, so much so I go to the insurance company. They normally don't issue the renewal notice.
Correct.
And they go on delaying, and just 1 week, 10 days before, they just scribble some things. They don't give an official thing. They just scribble something and say you'll have to pay this much. So it becomes very awkward, and
then scribble something, meaning why should you have to go to the insurance office? Your agent should do it, no? If you are giving him the business,
yeah.
So if he's not doing a good job, you should change your agent.
Because switching over things become difficult, and I go that side at Fountain, so I personally go and I don't mind paying. He can take his commission.
What I would request is we will stick to the regulation part.
Okay.
Because what you are saying is a process where it's your domain. I mean, how attentive you are. See, insurance company doesn't want to renew policies of senior citizen, period, right?
Yeah.
So it is, if we are in that bracket, it is our duty to get it renewed.
Okay.
It's as simple as that.
Yeah, thank you.
The font of the policy printing is not even A, but even micro A.
Correct.
Okay, that you just cannot read.
Correct.
What do you do when the policy is rolled out? Practically every policy, let me tell you, since February is rolled out with lots of mistakes. Lots of mistakes. Okay, Gaurang Damani proposal, the wife's name will be Aishwarya Rai. I'm telling you, no, it's a fact, I've got proof of it. Okay, the nomination is different, the addresses are different, everything is different over there.
So you just file one simple case with the ombudsman, as I had suggested earlier also. Just make one example out of them, and they will comply.
No.
So let them.
Yeah. We met ombudsman at that chambers meeting.
Met nahi. Government doesn't work on meetings. It works on writing. You write to them.
Where I was told that other than the policy not received, ombudsman will not handle any case regarding this.
So tell them to give it in writing. They will not. They have to. Ombudsman is.
No, I think
as I said, Oshang bhai, it should be in writing. See, if they give it in writing, I guarantee you, I'll personally show it in the Honorable High Court. Are they giving it in writing?
No.
Then,
they haven't.
So I have requested you for 2 years, sir. You take one case to ombudsman.
Cases with IRDA.
Exactly. So IRDA also will not help. I have said specifically. Yes. So you have to go to ombudsman, and it's really easy. It is not at all difficult.
Can I intervene over here? In fact, one of the things that we find at Moneylife also is that we want to take something forward. Nobody will send us a well-argued case with documents that there are 3 stages, according to me, of what we do. We first write about it. Okay? It goes into the public domain, as we have done yesterday with NEFT. We write the article. We get a lot of comments because people give their examples. We put it together as a memorandum. We go to the RBI, submit it. And we are able to then establish that it's not just what we are saying. Here are the number of people across the country who are suffering. So, Mr. Hoshang knows us very well. He will not put it in writing. He has to put it down in writing. If not, take it up with the ombudsman. At least write a complete document for us to take it forward. We also can help.
Okay. Most times we don't get an ID card. Even as of today, we are not getting an identification card from the insurance company. At least I have not gotten it yet. And so this is also now a part of the regulation. The reason this particular thing came is because they would change the TPAs and we would not even know about it. Right? The policy document will say ABC TPA, and actually the TPA is changed. So then that is why this was requested, and the ID card should be of the insurance company. So when you go to a hospital for cashless, your ID card should be valid. So they have to issue an ID card, and if there's a change of TPA, they should notify the consumer in writing 15 or 30 days ahead. It's there in one of the slides. In writing, the consumer should know if the TPA is being changed.
See, if the TPA is appointed from 1st of January, those renewals after 1st of January will be under the new TPA. Rest till the next year, 30th of December, they will be governed by the old TPA only.
Okay, so you probably are right in your experience. I have got documents where TPAs have been changed and the consumer is not being notified. Oh. So even if your case is right, this is good, right? If you get an ID from the insurance company and not the TPA. Yeah, policy portability, I think most of you know, as someone mentioned, 45 days prior to the maturity is the rule, and the cumulative bonus that you've accumulated can also be into the sum assured. That has nothing to do with the PIL, but it was included in the schedule 1, so I thought I should mention it. Free look period was specifically mentioned. Now it's a part of the regulation. So you have 15 days after you get the policy to look at it, evaluate, and if you're not happy, you can return the policy. As I mentioned, a product cannot be just arbitrarily withdrawn. Earlier it was happening a lot, so now they cannot do it. And the second point answers your question, sir. They cannot force the consumer to shift to another product. It's there specifically in the regulation. So they cannot just say, okay, this product is now no longer effective, you have to move to ABC, something else. So that just cannot happen like that. And all policies have to be renewable. As I mentioned, especially senior citizens, they were not renewing the policies. A lot of times, like the gentleman at the back said, they would dodge, they would not send the renewal notice and things like that. But now that cannot happen. In case they have not renewed, same procedure, grievance cell, IRDA, ombudsman, guaranteed result. This also has been included. Pre-insurance checkup cannot be charged to the consumer. It's specifically mentioned in the policy regulations. Okay, this is the most important thing. As I mentioned, this was last argued about 15 days back in the court. That section 8B specifically says that a one-page information sheet should be there. It should be uncomplicated. It should cover all the points of the consumer, relevant to the consumer, so the consumer doesn't have to run around, including grievances or what all clauses are there which will benefit the consumer. If the claim is delayed, then what is the provision, what is the recourse that the consumer can take. So all this has to be done. It is not being done, and IRDA in its affidavit admitted that the insurance companies have not complied with, and apparently they are following up to make sure it's complied with. So this is the main thing where all the fine print, the micro 8 font is no longer valid. This one page should take care of that grievance. So it's been argued. I think it will be implemented. Second point is self-explanatory. And all disclosures, again, same as 8B, 8E is similar. It has to be mentioned in the policy document. All the benefits that you will see in this presentation, they have to be a part of the policy document. It cannot be left unwritten. Any questions, or I'll move?
The pre-insurance checkup cost you mentioned, you mean to say that the insurance company has to pay for that?
Yes.
Okay. So that we don't have to pay and then take a reimbursement?
No. Well, the procedure is not specified in the regulation, but it should not be out of your pocket. Whether they pay for it or they send you to a designated place, or you pay for it and get it reimbursed, that is...
After the insurance is done,
yes,
and they find you not worth insuring.
No, but they have to pay. No, you cannot pay that. I'll read out the FH clause. The cost of any pre-insurance medical examination shall generally form part of the expense allowed in arriving at the premium. Simple. I mean,
that is, if they don't accept you.
So again, still they have to pay. They have to, no? It's part of the premiums. So whether you end up taking the policy or not, that is not your cost. It is their cost which is accounted for in their premiums. So I'm sure they are arriving at the premium saying, if I do 100 checkups, 2 may not pass, but I still have to take care of that in the premium amount.
Okay, because normally now what they do is they ask you to pay for it.
So you show this. You should not pay for it.
Okay.
It is accounted for in their premium calculation. You should not pay for it. And if they make you pay for it, then again you can follow the procedure. It's really, really simple.
Okay.
Of this ombudsman thing.
And this portability thing, you said 45 days in...
before the expiry.
Before the expiry. So can we do it even a little earlier, like 2 months or something? Or is it exactly 45 days?
That I think is not specified. You can, but you'll have to check with your agent, because you'll lose that premium for that extra 1.5 months that you've paid. Okay. So that is not specified in the regulation, but you can. But why would you want to do that, right?
Okay. The process may take quite some time.
45 days they have to compulsorily give you the portability premium. The schedule 1 is very detailed. They say that also, that you have to notify to the insured that you have done the portability and the new insurance is in effect.
Okay.
So schedule 1 is also part of the document. It is very detailed. So 45 days is reasonable. I mean, you can do it earlier. I don't know. It depends on the individual insurance company policy, but 45 days is the regulation.
As you said about the pre-insurance checkup, above the age of 45, these people are still charging, and the customer has to pay from his own pocket. That practice is still going on. Okay, so I would appreciate if you can give me a copy. I'll be happy to show it in the court, because I'm always looking for material to show in the court that they are not complying with the regulation. So if they are, yeah, I'll give you my email ID. Okay. Sure. Please send it. I'll definitely mention it. Yeah. Okay.
The petition now is over 400 pages, so we can happily add more things. Okay. So before we move to the claims, any questions on the policy issuance? Yes, sir.
If I can take up the original question, I'd like to take up about 3 points that you made. One about the renewability of the policy, other one about the increase in premium. Third, if they don't qualify or if they don't agree with you, the procedure that you had described. So hopefully, I'll relate to the case I'm actually fighting at the moment. The insurance company had changed, as I said, benefits and the terms of the condition of the policy. They did inform us some good 4 months ahead to say this has been approved and this is what's going to be implemented in the coming year at your renewable time. But it was very general. It had no specifics about my policy or the policy of the people that we are covered with. So it came as a bombshell when the premium renewal notice came some 3 days after the renewal date.
Oh.
But that's beside the point. I kept on reminding them that you not sent me. So I did get the renewal, but it increased the premium by 30%. Then they tried to argue the case with grievance redressal, their own officer with whom I took up the case, to say, but we have increased this, we increased this, we increased this, we are giving you this benefit, and therefore this is it. I said, no, please put me back on my original terms and conditions of the policy. I don't want all these benefits. Kept on saying, no, the policy is no longer, the product is no longer available.
Okay.
Right? As a result of it, then I took up the second part of it, which was after the grievance redressal went all the way up to the CSO, of the CEO. Same thing, nothing more, no product is available. Next step, the so-called the internet online facility by the IRDA, which is the, I think called insurance grievance redressal, IGR, something like that. They kept on just playing the ping pong between me and the insurance company.
Correct.
I said, look, I'm not interested in what the insurance company tells me. I know the answer. I want you, Mr. IRDA, to answer me. Not answering so far.
They will not, yeah.
Right? And the last bit is that having now to take the final step with the ombudsman. Now, I was got another case with ombudsman, and I've been waiting 17 months for the case to be coming up for hearing. So it is extremely frustrating to now to go through the same process with another insurance policy. I wonder, am I doing something wrong here?
No. Okay. I'll try and remember what you've said. The first part is about your policy being changed. So if you remember in the presentation, I said you can't be singled out for shifting from one policy to another. It has to be across the portfolio. So if they are shifting everybody, then it's fine. And there is a process laid down by IRDA how they can close down a product. It is there in the regulation. So they have to submit the claim record of that particular policy, and they have to prove or justify why they are closing the product. It can't be an isolated case. It has to be across the portfolio. So have you found out if it is, and you said your particular thing was not the only one, right? So that is good. You can't be singled out. So
I don't know about the other, sorry.
No, in your interaction with IRDA or the CEO, have they said they've closed the entire product, or just for you it is not applicable?
They closed it. The product is no longer available.
Okay. So then what you have to do is you have to find out if they are complying with the IRDA guidelines on how the product has to be closed. See, an insurance company has the right to offer a product, right? I mean, in a business, you have the right to offer a product and then withdraw it. But it can't be in an unreasonable way. And the unreasonableness is defined in the regulation. So the company cannot just shut the product and make the consumer shift to another product. So as long as they have followed the procedure, then they are justified in closing it. And I don't know, how long was the product active? 2 years, 10 years, 5 years?
4 years.
4 years, okay. So if they followed the procedure, there's nothing much you can do. They have shifted everybody, then they are justified to do it, as far as I understand the regulation. And so again, so if you go to ombudsman and if they have closed the entire portfolio, for whatever reason they have justified with IRDA, I don't think it will help. That is my personal opinion. And the second part was about, what was the second question, sir?
The change in benefits and as a result of the
again,
premium
so if it is only
yeah.
for the entire portfolio, or if it's only for you, then that's a discussion.
It's just that the product has been enhanced.
Correct. So basically what it means is, in layman's term, they found out that they are making a loss on that particular product, and no businessman wants to make a loss. So they have revised the product, enhanced it or changed it, and they want increased premiums for that particular product, in simple terms. So they've probably done it entire throughout the portfolio. That's my reading of it.
The sad part of it, as a result, a lot of us are got caught up now having to pay 30% extra premium for no reasons whatsoever when the benefits are not really...
No, it's not no reason whatsoever. The reason is very clear. They are making a loss.
Yes.
So that's why they've changed the entire portfolio.
I understand that if you have a group insurance as an employee of a firm, you have an option to, when you move out of the firm, port it into an individual policy. This is mandatory for the insurance company to provide to you, right? They need to give you a product.
Yes.
At that time, can they ask for medical underwriting process? Can they ask you to do that again?
It is not specifically mentioned in the regulation, so I don't think they should. If they do, then maybe you can fight it, saying I was in group. See, generally what they do is they look the other way for group insurance. The group insurance claims ratio is always very high because a lot of claims come and they don't, they just pass it because they want that bulk business. So they would be very liberal in giving a group insurance policy. Right. So when they make you do another medical test, you have to check, has it been a long time? There is no regulation, it's a grey area.
See, basically, whether as a bank customer or as an employee, typically you get a lot of insurance in group without even a medical screening, right?
Because they want that business.
They want that business. And now, when you want to move it to an individual policy, now they're obliged to give you a policy, but at that time, if they are able to ask you to go for medical underwriting, a lot of people at that point in time, after all those years, may not qualify.
So then, I think then you have to fight it. That's the only way. I'm not aware of this, honestly. So the first thing in claims is, probably most of you know, but there are two types of claim processing, cashless and reimbursement. And if you may recollect, in July 2010, the insurance companies, especially the public sector, they closed cashless for individual customers. Meaning earlier cashless was available for everybody at all nursing homes and hospitals. So the statistics behind it is the claims ratio for cashless and reimbursement is very different. For cashless, the insurance companies were paying a lot more money. So they realized that reimbursement, individual guy comes, we can squeeze the guy, not pay. And they realized that 83% on an average, they are paying more for cashless in 2010 level. So maybe that was the reason they stopped cashless. And because of which we are, as individuals, we end up going for reimbursement, meaning we pay the hospital our bill and then we approach the insurance company for reimbursement. Cashless was when the hospital gets the money from the insurance companies and it's a hassle-free process for us, which is really ideal. So as a consumer, we really want the thing to be cashless. So the first thing you do is, whatever your insurance company, you look at the list of hospitals that are in your area and keep it in mind. Because God forbid if there's an emergency, you should still try and do cashless as much as your presence of mind permits, because cashless is really hassle-free. I mean, there are some minor issues in cashless, but generally you should go for cashless because then it's the headache of the hospital and the insurance company. Then you don't have to worry about it. But reimbursement is, you end up paying the hospital 100 rupees and then you keep fighting with the insurance company, paisa nahi de raha hai, paisa nahi de raha hai. So it is best that you go for cashless. Okay, so now let's say you end up going for reimbursement where you have paid the hospital and now you have to submit the papers to the TPA. So then if you recollect, a lot of times they would say, yeah, you want this paper. Then they say, no, I need this paper. Then they'll say, no, I need this. So that has to stop. On the ground, it is not happening. I specifically showed evidence also 15 days back that they are not complying with the regulation. They have to ask paper only in one time. They cannot keep asking for papers in a piecemeal way because they want to play with your money for a longer time. So once you submit the paper, they can ask only one more time. Okay, we need this from your doctor or your hospital or your previous history, blah, blah, blah. So this specifically you have to mention if you come across a claim where they are harassing you for papers in a very periodic way. So section 12B1, TPA is not permitted to settle claims. Now this is a loaded statement. Why? Because in 3 or 4 drafts that IRDA gave to the court, it specifically said TPA cannot settle claims, they can process claim. At least 4 drafts they said this. And suddenly in the gazetted regulation they put the clause, they cannot settle claim but can recommend the claim to the insurance company. It was a totally under the belt hit and I filed an affidavit immediately that this is cheating. I didn't use the word cheating, but I said this is not right because TPA by law cannot settle the claim. It can only process the paperwork. And you can't fight outsourcing, right? I mean, company says we want to outsource this particular job. You can't fight it. So, okay, they can outsource it. But TPA is not allowed to settle claims, period. That is also there in the regulation. So, the second part is, sir, let me finish, no?
Okay, sir.
Then you ask as many questions as you want. So, the TPA cannot settle claims, but they can recommend the claim amount. The second part I'm fighting in the court. And, I don't know which way it will go. But they can definitely, they have to transfer the documents electronically to the insurance company for a decision. So this example I gave saying that LIC does it, why don't you do it? And they found out, they said yes, LIC actually transfers the papers electronically across their network. So we will also put it in the regulation. They've put it, obviously they've not implemented it yet. But as per the regulation, they have to transfer the document to the insurance company for the actual adjudication of the claim. Okay, now this could have been like the mega scam, which I don't know the amount, but what was happening is the check was coming from the TPA's account. And just think for a second, like 100 rupees ka claim hai, and the TPA has taken 100 rupees from the insurance company. How much is it paying the consumer? 10 rupees, 50 rupees, 90 rupees, 100. There was no audit. IRDA has said in its affidavit, we never audited the TPA account. So 13,000 crore rupees claims passed every year without audit. Think again, I'll repeat that. Your claim is worth 100 rupees. TPA has taken 100 rupees from the insurance company. How much has it paid you? How do you verify? So this, how I stumbled on it is, one consumer gave me some papers. The check date was, let's say, 1st January, and the thing was couriered to the consumer in March, end of March, the claim amount. So then I realized that they are playing with the float, the TPAs. Then I looked up the regulations and I found out that why should the TPA make the payment? My contract, it is not a tripartite contract. It's a contract with the insurance company. So TPA is just a facilitator of processing the claim papers. So specifically this was argued very heavily, and luckily the judge was very strict on this point, and they had to put this where the amount will have to come from the insurance company's bank account, period. So there is no need of an audit, no? So this is done. So still as of today also some companies are sending the check through the TPA. Hopefully that will stop, because it was again reminded in the court. So if any of you get a check, or now it's ECS, from the TPA's bank account, then please let me know. I'll be happy to show it in the court. That's not allowed. Okay. Now this also, everyone has heard of the dreaded reasonability clause, which was not at all reasonable. So now the claims have to give this particular statement in all their settlement letters. It is self-explanatory. They have to give a medical reason for rejecting or denying or reducing the claim amount, specifically mentioned in the regulation. There was a clause in Benefits to Policyholder 2002. There was a particular act which said that if the claim is delayed beyond 30 days, the insurance company has to pay interest at the rate of bank rate plus 2% for the delayed payment, which most of us did not know, including me. And I just was reading that act and I saw it. So then this clause was particularly entered in the regulation, that this particular interest clause now has to be part of the policy document. So if your claim is delayed over 30 days after the last paper was submitted, then you are eligible to get interest. And this now is a part of the policy document. And one more trick they played is they said all provisions of 2002 interest of policy holders are applicable, but they are not saying what is that policy provision. So now that also is specific. They have to write that interest will be payable if there is a claim delayed by over 30 days. I saw a few insurance policy companies ka policy, it is there. So if it is not there, you can write to me or you can write to the insurance company that they have to include that clause in the policy. The other treatments are, it's still some gray area. They say it may be covered. They are not saying it should be covered. So they've left that to the discretion of the insurance company, whether they want to cover Ayurvedic, homeopathy and other treatments. And earlier, in fact, thanks to Moneylife, we got some documentation which said the TPAs are getting incentives to reduce the claim amount. It was supposed to be a hidden thing, but we got that 2 contracts we got between TPAs and insurance company, 2 different insurance companies, where they were actually incentivizing the TPAs to reduce the claims. They were actually giving slabs, 10% if the claim is below this, 20% if you reduce the claim. So that was produced in the court, and they put that in the clause saying they can't, at least officially, they can't incentivize the TPA to reduce claims. This is not to do with the regulation, but it is important to keep in mind that everything is prorated to the bed charges now. So we have to keep in mind when we take a room, what are the bed charges. And copay, I think, is a good thing. If it's been there before the regulation also, that the consumer is made to do a copay of 10% or 20%, which means whatever the hospital amount, the consumer has to pay that proportionate amount. This in some ways will reduce the fraud from consumer end also, because a lot of times consumer may inflate the bill. So if there's a copay, there's a less chance they may do that. I've already said cashless is the best thing. And the second and third point is just, it depends on your policy document. So whatever your policy document has mentioned, you should comply with, because then they will look for flimsy excuses to reject claim. Okay, you took 24 hours and 1 minute to send the document, so we will not pass it. So we should try and comply with these things which are mentioned in the policy document. And of course, I think they give 15 days to submit all the claim papers. Some give 1 month, some give 15 days. So we should be careful to submit the papers after hospitalization within the stipulated time. So this is a dispute resolution. This is almost the last slide. So any questions related to claim we can take now?
As per Health India TPA Services Private Limited, there is one advertisement regarding appointment of doctors. And they said the doctors required for various roles like claim settlement.
What date is the ad?
They require MBBS, BMS.
What date is the ad?
Health India TPA Services.
No, date of the advertisement.
10 December.
Can I please have a copy of that?
2014.
Okay. Can you please give me a copy of that?
So I was fighting a case with the Ombudsman against Reliance General Insurance Company. The case came up after 2 years, 10 months. 2 years, 10 months. And the amount was paid to me, but without interest. So I wrote again to Ombudsman, but still there is no reply.
Okay. You also said 17 months. See, when I applied with the Ombudsman, my case came up in 6 months. No, let me answer the questions, then you speak.
No, 1 minute.
Huh.
So when my case was not come up for a long time, I wrote again to Ombudsman and the RTI. And they told me for 8 months, Ombudsman has not been appointed.
Yes, correct. That is correct information.
They told me they have only one Ombudsman for entire Maharashtra and Goa.
Correct.
So sometimes he goes to Pune, sometimes he goes to Nashik, and all the time he is on the tour also.
Correct.
So maybe
that is correct information. There was no ombudsman for almost a year. So that is correct. So maybe it got delayed, that's why. But generally it should come fast. I mean, my personal thing came up in 6 months. So even if it comes up in a year, I think that we have no choice. What is the choice we have? Interest part you should fight. No, you should ask it in the original application that you made, that I would like, whenever it's being adjudicated, I need interest on that. So now you quote that interest clause, that if your claim is delayed beyond 30 days, bank interest plus 2%. Now there is a regulation to back up your interest claim. I'm trying very hard that they restart cashless, but they are fighting very hard because they are seeing that cashless they end up paying a lot of money. And the claim ratio, Moneylife reported, claim ratio has dropped to 32% in the last 2 years. So they were paying whatever premium was being collected. Generally, it is 100% claims payout. But in the last 2 years, it has dropped to 78 and then 68%. So profits have jumped to a phenomenal number after they stopped cashless. So hopefully they start cashless and then the hospital jane or insurance company jane. But till that happens, what I had suggested is the exact same thing that you said, that you pre-declare the entitlement to the consumer. So you tell the consumer, for these 42 ailments, we will pay you this much. Appendix, we will pay you 45,000. So put it in the policy. So the consumer knows in 45 whether I have to go to Breach Candy or a local nursing home. And if I want to go to Breach Candy, then I'll have to pay the difference. So this was specifically argued, and this particular point is why all the 27 insurance companies intervened, saying we can't do it. They said because it's a document, it's a policy, it's a contract, and blah blah blah. They gave terms saying that we really can't do it because we don't want to declare it, and there is a lot of variations like A class city, B class city, C. Within a city also there are different parameters. So they are resisting it very hard. They are not doing that.
Limitation the consumer court takes 2 years and ombudsman 1 year. So if it takes 2 years in ombudsman, then you want to go to the consumer court another 2 years have to be there, then there is a problem for condemnation.
Correct. So the process is slow, but that's the only choice. And try your best to do as much as paperwork as possible, so the ombudsman thing may go smoothly once your hearing comes.
Sir, in one of the case, a doctor has charged separately other than the hospital bill X amount of money, and the claim was put up for that also. The ombudsman also, till the ombudsman, they went to the ombudsman, they rejected the claim. Can anything be?
Saying what?
Saying that this cannot be entertained. It is a part of the policy. Not a part of the policy.
So I don't know. I have to see the specific case. But it must be, if the ombudsman has said it, then maybe you have to read the policy document.
Okay.
Separate. So then, okay. So then maybe it has to be part of the.
It is not entertained.
Okay. So maybe what we can do is we can try and get it on the policy document.
Yes.
So the person knows that when you go for a bill, you have to request the surgeon to put it in the hospital charges.
Especially when the surgeon does the operation in some another clinic or some, at that time this dispute arises.
So it's there in the policy document?
Yes, sir.
Yes.
So then you can't fight it, no? It's a contract you signed. So then maybe what you have to do is request the doctor to put it in the hospital bill. So that, I think that awareness is not there. Even I didn't know.
So I wanted a clarification. There is a policy which has been in effect for the last 7, 8, 9 years, and it was for a certain X amount. In between, we had requested that we will reduce the amount. Now, for some reason, and now we wanted to enhance it back to the original, and now the agent is not accepting it.
What is the age of the person?
It's 55.
I think they should.
But policy is still in force.
So they should. Generally, they increase the amount.
Okay.
They should. I mean, just write to them and see if he'll give you. Agent might not even have put the proposal in the office. You never know.
That's possible. So who should approach?
So you write to the agent in writing email and mark a copy to the DO or the insurance company.
Can I ask one last question?
Yes, of course.
In my own family, there is one claim.
Okay.
We are about to file it. It's not available in Hinduja for individual, but corporate type is there. When I inquired with my development officer in New India Assurance Company, he told me if there is expected estimate is more than 3 lakhs,
Then pre-approval cashless can
be obtained with CMD approval.
CMD?
Yeah.
What is the policy sum assured?
5 lakhs.
So no, I don't think that's, I mean, did they write it in your policy document? You need a CMD approval for 3 lakhs.
No, it's not.
So then
for facility in Hinduja specifically.
So who's asking this? Hinduja?
No, my development officer told me if I want cashless facility which is not there in Hinduja for individual policyholders, it is only for corporate. If I want it, then he will arrange it through pre-approval from CMD, Chairman Managing Director of.
Do it, no? Cashless is ideal. So if he's taking the effort to do it.
But then again, he has mentioned the limit of 3 lakhs. Claim should be estimate of expense should be.
That is a pre-authorization.
Okay. Thank you.
That we come to the end of a wonderful session. Let's give Gaurang a big hand.